Hello traders and welcome to another video review. Today is Tuesday, September 17th, 2024. Let's find out what's going on the economic calendar today. Industry activity index from Japan has increased from minus 1.2% to 1.4%, beating the expectations of 0.8%. So that's quite nice indication of the activity in business sector in Japan. We are waiting for the German data. We got the current conditions, economic sentiment data from Germany is scheduled for release at 11 o'clock, and hour and a half earlier German Buba Vice President Buch will give a speech as well. The Eurozone sentiment is scheduled for release at 11 o'clock as well, together with the speech of the ECB McCall. Bunch of data from the US. Core retail sales and retail sales are the main event of today. They are scheduled for release at 2:30, together with the data from the Canada core CPI and CPI data. Housing starts from Canada starts at 2:15. As you can see, the retail sales in the US are expected to decrease from 1% to minus 0.2%. The core retail sales from 0.4 to 0.2%. ECB Elderson will give a speech at 3 o'clock. Then we have another data from the USA. Industrial production scheduled for release 3:15. Business inventories and retail inventories excluding auto scheduled for release at 4 o'clock. And then we got global daily trade pile index from New Zealand at 4 o'clock. At 7 o'clock we got 20-year bond action and API weekly crude oil stock. It will be released 10:30. Last event of the day, last data release at 11 o'clock, Westpac consumer sentiment from the New Zealand. Because of the quite important data from the Germany, we are going to start our technical part with euro-dollar. Euro-dollar 4-hour chart is looking very bullish. As you can see, we have a breakout above the trend line with this very nice bullish candle towards the extremely overbought market conditions. On a 4-hour chart, we hit the level of 1138. Not too bad. However, we still should test 1.11 so this is like 14 pips away from the wave B high and the technical resistance. Nevertheless, if we take a look here on this, on the structure of this rally, we can see 5 ways to the upside into the extremely overbought conditions. Means that we are now most likely will be positioning it ourselves for the pullback. The intraday technical support is 1.1117. The intraday technical resistance is the swing high 1.1138. So the outlook for the euro-dollar looks bullish. However, we need to, let's say, test this breakout of the trend line, and then after the test is successful, continue to the upside, because we have an impulsive wave to unfold on the euro-dollar. Because of the data from the Japan, let's take a look what is Japanese market doing. If we take a look here on a 4-hour chart, you can see that there is a bullish divergence. We have a bullish engulfing pattern from the lows of the level of 139.59. So far, quite nice movement to the upside. However, the upside seems to be limited at the level of 141.25 local technical resistance, and the swing high pin bar candle made here around the level of 141.25. Now the market is consolidating roughly around the level of 140.68. As you can see, not much volatility. Market is positioning itself for the movement of tomorrow because of the Fed, of course. But right now, on a daily time frame chart, clear visible bullish divergence. Now let me just zoom in a little bit. We got the bullish divergence, pin bar here, but this one has not been terminated just yet. Still bears are in charge of the market. However, the bulls are trying to get the advantage from the bullish engulfing pattern. US dollar to the Canadian dollar daily time frame chart is quietly consolidating around very interesting levels. This is the level of let's go this one, 1.3564, which is the technical support, and there is another level, range high, 1.3603, which is the technical resistance. You can see that the upper level is 1.3622, which is of course the high from the September 11, and the market keeps moving higher, keeps working on this upward movement as long as it stays above this weak but still nice trend line. The outlook remains bullish. If we apply the Fibonacci retracement, you can see that the market already retraced. Let me just place it here, and this one, let's here. You can see that the market retraced roughly around almost 38% of the last wave down. The 38 is at the level of 1.3633, so not that far away, just below the 100 periods moving average. So that's the daily time frame chart of the US dollar to the Canadian dollar. Is looking again very nicely bullish. However, this movement to the upside is now in 3 waves. Only if we apply Elliott wave. From the bottom we got the wave A, then we got the wave B, and this is the wave C. So it's not impulsive development to the upside, quite opposite. This is only 3-wave impulsive, 3-wave corrective movement into the let's say some sort of the consolidation ahead of the Fed. Because of the data from the oil, let's just take a look what's going on here. We can see straight on some sort of the movement to the upside. Let me just remove this arrows, and what do we see here is very nice bounce from the level of 65.27, and now we're moving upward towards 50 periods moving average, roughly around the level of 70.71. Just ahead of the key technical resistance. And on the 4-hour chart, this market broke above the major technical resistances, then tested the 50 points RSI level, right, the neutral level, and then bounced again. So roughly this level here, let's just say it is the level of 68.48. This is the level of this is the neutral level, and the support right now, of course, obviously is the support now, but this is the neutral level of for the bulls, and it corresponds with the level of 50 on the RSI chart. So any movement to the downside will eventually be marked as the negative. Any movement to the upside above and so on will be considered bullish, of course. So the situation is quite clear here. One more level I forgot to place is of course the low here, and this level is the technical support, which is very important, so it's very thick. Right now it doesn't actually look too much impulsive. However, the momentum is quite strong. We got still some room to the upside, so we can see another development on the oil. Now, after 5 waves of impulsive wave, after this wave 5 was completed at the level of 60,664, we got movement to the downside. We made a local low roughly around 57,605, and now we're bouncing back up, but the momentum went down below the level of 50. Again, then the level was tested and made a local low at 37. Maybe we didn't hit the extremely oversold conditions, but if we break above the 50 periods moving average, which is 58,830, and then if we break above this low, which is 59,427, there is a chance that the market will eventually move higher and the momentum will break back to the upside. However, if there is no such a improvement here by the bulls, we can see some sort of the bearish pressure here, definitely around this area, definitely below the level of 59,427, and the next target would be somewhere around the level of let me just take a look at this situation here. The next target would be somewhere around the level of 56,000. Basically the lows of the wave 4, the low of the wave 4 is 55,552. So this will be eventually the next target for bears before the market will get a chance to resume the up move, the bullish impulsive 5-wave count to the upside. So that's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.